So I want to welcome everybody to the How to Make Money Trading Stocks webinar. The Saturday edition of the Friday show that we usually do at 10 o'clock on Friday morning Pacific time. I was engaged in another activity yesterday and unable to do the session. And we're also experimenting with having the every Friday show go out at 11:30 in the morning. Yes, Scott. Thank you. Scott says he missed he had bear meat withdrawal. And so, interesting day. Yeah, yesterday was an interesting day in the market. And thank goodness that conditional orders work so well. So I want to remind everybody that all the materials that we do present here are for trading purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Michael is not joining us today, and I don't know if Mike Traeger is going to pop in or not. We've been having some really good training sessions for the premium members of the Active Trend Traders. This coming week, we're going to be talking about symmetry of time and price action, with the aim of this particular training session being that if you when you're doing your stock analysis, if you are taking into consideration past movements, you will be, and how much time they took, and also what the magnitude of their moves were, it will provide better planning to go into new trades and help shape our expectations of what we think can happen. We saw that on one of our trades this week with XRS, came in and hit a particular Fibonacci retracement or extension, and it was time to exit because then it fell back down from there. So I put a high degree of focus on training, and so that's primarily why I do what I do, to help people become better traders. This week, I have to ask myself the question, one, is the market showing signs of tiredness? Is it ready to sit down? We had several days this past week where we had a mixed market where one of the indexes would be up, the other one would be down, all in the same day. And so it's like the indexes are kind of getting out of sync with each other. Friday was a good example. The Russell was up nicely, but the S&P was up just a little bit, and the NASDAQ was down. So as we get in and we'll start looking at the charts, we'll see that the S&P is at in a resistance zone, and the big question is will it plunge or will it pause? NASDAQ, again, also in a resistance zone. It's moving sideways. It's showing some weakness. Some of the reading I've done in preparation for next week already, the question by a lot of the money managers out there is their migration from being bullish to being more bearish on the potential for the market going forward. Of course, the price action will dictate what happens actually, going forward. Russell in a resistance zone also held up surprisingly well. Russell had a pretty good move on Friday, which was quite interesting, considering the other two indices were showing signs of either stalling and or at least slowing down a little bit. Those of you who do read the Investor Business Daily, they show the market is uptrend under pressure. And so what are the catalysts that may drive us next week? One, earnings, of course. We saw with Google or Alphabet, whichever you want to call it, had they disappointed on expectation. They had an okay earnings report, but they disappointed on the expectations moving forward. It got hammered, and it took with it in sympathy. It took with it Amazon. It also took with Facebook. It was kind of interesting after the report on Thursday evening. I was looking at Facebook and Amazon, and almost immediately they were down. Facebook was down about $2.50 to $3 from where it closed on Thursday. Big fly in the ointment. Fed meeting this week. They report out on the 27th at about 2 o'clock in the afternoon Eastern time. So I've doubled this up. This is not a typo. Fed meeting was intended to, that's where the emphasis is going to be over this week. What we can expect going into probably Monday, Tuesday is the markets will probably move around in a fairly tight range. Those of, and I'm not going to be making any big bets on those. We also have the earnings coming up. Whose earnings come up this coming week? Well, Facebook has earnings on the 27th, the day the Fed meets, after hours. And then Amazon has earnings on the 28th, and they report after hours. And yeah, thank you, Scott. Yeah, Apple reports on Tuesday. And Apple's usually an after-hours reporter also. And so we've got some biggies reporting out this week that Barron's was talking about how the fund managers are actually expecting, here comes Scott, be ready, are expecting the potential of a 10% pullback from the recent highs due to disappointment in earnings. Again, that's not happened yet, but is it a potential of something, could it happen? It was actually on the, I think it's in this weekend's edition of Barron's. The Wall Street Journal TV had an interview with the guy who wrote the article, Scott. And so that's what we're looking at going into next week. I'm looking, we're going to be talking this coming Wednesday. We're going to be talking this coming Wednesday about symmetry of the trades and for preparation. And one of the things I do look at it on the S&P, especially S&P chart, is I'm looking for symmetry, something similar in action to what took place back in October, November, December of last year, where we got a lot of nice weekly movement that were really, large range moves that were tradable, but you had to identify one, support, and that's where you'd plan your trades, and you had to identify resistance, and that's where you'd plan to, exit your trades or carve out something out of the middle. If we get a similar type action and current market conditions emulate that specific time frame, then we could get some pretty wide swings, 2.5%, 3% on a weekly basis. And again, those are great for short-term trades, but it will not necessarily be something that we would want to be either long-term short or long-term long until we get the uptrend or downtrend kicks back in. So let's see, this is percentage of stocks above the 20-day moving average. This was as of last week, and as you can see, we had punched buck up above it had bounced and went back up to about 75. Where do we find it this week? Well, it actually stuck its head back above the 80 level during the week and then has fallen back down. Again, Mike Traeger and I do not use this particular indicator as it's not a real good indicator for, hey, when is it time to go short or get into short type positions. But it can be indicative of a time frame where you'll say, hey, we've had a good run, we came up, made a new high, but it appears that we've stalled out here about the 80 level and it's turning back over. If you happen to be in this ride from here to here and weathered this and we've come up and now made this lower low, not as many stock participating in the rally anymore, it might be a good time to at least lock in some profit. And so Scott asked a question, I don't follow a trend until it changes. No, I do follow the trend, Scott. That's why right now I'm not saying, hey, it's time to get short. Because the trend, at least since February 11th on the S&P, has been up. And so if we do, in fact, come down, find support, then I'll be looking for a break. Yeah, I do take some profits at resistance zones. And it's all within, and I also take profits at, if it moves up a certain percentage point, I'll go ahead and take a little bit of profits off the table. Nothing wrong with reloading after it gets back down to a support area. And so anyway, on this particular chart, we've seen now that we have come up, made a lower high, and we'll see which way this is going to go to here from here. If it drops significantly, let's say the Fed disappoints the market if they disappoint the market, and the market says, really don't like that. If they come out really wishy-washy or more hawkish on the upcoming rate hikes, then that will impact the market. If they come out and they are fairly dovish, saying that we'll do everything to continue accommodating the economy and that type of stuff, then we could look at them being almost a non-effect on the market. The other chart that I like to take a look at, and this is something we've added in, is this is a monthly chart going back to 2002, and they've actually expanded the time frames for at barchart.com on this particular chart. I still capture, this is the stocks above their 200-day moving average, and as you can see, we have pushed back up, almost made a new high. Matter of fact, midweek this was actually up above this peak right here, but at the end of the week it has fallen back down. And I always keep an eye on what is going on with this is the spiders right here. And they came back up, and they are in this resistance zone that runs from about 2130 to about just below 2100, and so it is, that resistance zone is in fact at this point working well. The only question is if we reverse off of this resistance and drop, how far is it going to drop? Is it just going to basically do a short-term little pullback down to support level and bounce higher from there? And if you're trading the trend that started on February 11th, then you'll be looking to take bounces to the long side, and with the expectation that it will break through this resistance level here and move on to new highs. But also we will use this resistance level to, if prices get up to there and start showing weakness, then we'll look at saying, hey, it's time to get out of this particular trade on the indexes. Let's see. Okay, we're going to go to the charts here shortly. Here's where we closed the week. Dow up 3% for the year. The S&P up 2% for the year. And as you can see, that is nice gains from where we were last week. The NASDAQ actually dropped from where it was last week, along with the NASDAQ composite. But the Russell, on the other hand, the Russell actually strengthened. It's up about almost 1.4% from where it was the week before. So the Russell was actually acting like the stronger of the tracking indexes that we take a look at. And so let's take a look at some charts here real quick. And that's Tesla. SPX. Okay, SPX. We'll start out on the daily chart with, what is it trying to tell us? First, on Wednesday, we put in this basically a shooting star type of a pattern here on a daily chart, and then it's followed by a long, bearish candle the following day. This basically qualifies as what's called an evening star type formation, which is a bearish reversal signal. Hey, Anil. On Friday, for the week, like I said, we had positives. We broke through this downtrending line. So one would think that that would, basically cancel out this downtrending channel, and we'll see what takes place. If we open up Monday and we're actually back down behind it, then that was just a test bubble, a test shot up into the this resistance level that starts up here about, well, from the downtrending line, resistance line, up to about this area up here is about the 2130 level, which, 2135, somewhere around there. And so prices had pushed up into the zone, and that's one thing to remember, that a lot of times resistance and supports, they're not necessarily just a line drawn in space, but they basically, most of the time, will be a zone where prices can be expected to do something, either to break out from it, to move on to new highs, or break down from it. If we're talking about resistance, if we're talking about support, same type of thing. Resistance zone. The yellow dotted indicator here, that is the 50-day moving average, 50-day EME. And as you can see, prices had pushed away from it, and we were still getting that extension. Is that the one you're talking about? Okay, great. And the 50-day approximately matches up with the 8-week moving average that I use. It's somewhere between the 8 and the 10-week moving average. I like the 8 because it's a little faster. So what other things can we take away from the chart on the S&P? One, new high, but not a new high on the TSI. New high, but not a new high on the momentum. So what do we have going on here? We have negative divergence, which oftentimes is the early clues that we are going to get a reversal and a drop down below it. Now, it doesn't mean that you can't push to new highs, because we had this negative divergence going on here and here when we were making this formation here. And as you can see, we pressed on and went further up. But what I like to keep in mind is when it happens the second time, and sometimes it'll happen a third time, it's when it starts reoccurring, is at one of those points is when it's going to say, hey, see you later, I'm going into my a larger corrective mode. Again, how will we particularly play this? If you'll notice, on the way up, the price action respected the 8-day moving average fairly well. Then we came back and we did this retest at the 20 and then bounced up from that. And oftentimes, as the uptrends start to slow, what you'll see is they'll start coming back and testing the longer term moving averages, like I said, in respect to the 8-day moving up, but then we came back and tested the 20. And as we're pushing our back up, we have retested the 8, but if we get some weakness, excuse me, it would pull up into the 20 and may overshoot it, and then you'll see your topping process going. What do we have going on here? We've got a potential head and shoulders going on. Okay. Again, potential because it hasn't fulfilled itself yet. Since the Barron's magazine was talking about a potential 10% sell-off, I took this high here and showed us where exactly a 10% sell-off from the recent highs would be. It'd be about down here about 1900. And those are, like that's just hip pocket information that I like to be aware of. Okay, where might it go? All right, and then I ask myself the question, if it goes down towards there, what kind of support might it find? Well, it might find support here at, of course, the 38.2% retracement, which you can see is a level of support. Might find support here at the 1950 level, which is a level of support. And so that's where we would be looking at potentially if the trend then reverses itself again, the short-term trend reverses itself, those were the places we would be looking at entering into trades. Let's see, on the weekly chart, and I'm covering the S&P in a little bit more detail because we're seeing the similar type things going on with the other charts. S&P, 1. Not quite a shooting star pattern, but the sellers did come in and drive the price back down from its weekly high. So this long candlestick wick at this point here is telling us, is showing us exactly the level where the sellers are coming in. Hence the essence of strong resistance at that level. And it would be kind of interesting to see if prices kind of bounced around in here, came back and did a retest up in this level, push back, retest, push back, and that would give us additional clears. That will basically be our initial clues for if it continues to ricochet down off of this and it breaks this level here, breaks down below this trend line, that's setting us up for a more healthy pullback than what we've had so far on the way up, because this is still a very steep incline here. And Gino will get to the stocks in just a little bit, okay? NASDAQ. Okay, and I did miss the on the S&P on the momentum. The momentum on the S&P was on the weekly basis was divergent. It has dropped down from its high, even though price action was making a new high. Taking a look, the weekly chart here on NASDAQ I find very interesting. 2 weeks, well actually 3 weeks ago, we get this bearish Harami. And it was somewhat voided last week, but now we're right back down. It tried to bust through this trend line and has now failed. We have the TSI turning over, but it may do one of these patterns where it bounces its way down. We have strong support here at about the 44.28 level, which corresponds with the 8-week moving average, which also corresponds just about with where the, as you'll see right there, right about where the 200-day moving average is. Positives on the chart. We have one, the 50-day crossing above the 100, almost ready to cross the 200. Those are positives. Negatives on the chart. We have a island top where prices have gapped down from this. And so now the 20-day and the 8-day now become resistance. And also this downtrending line is back in play as a resistance level. And so we'll see if it hammers down against these moving averages. And again, during the initial part of the week, what I'm expecting is just basically price action to kind of oscillate in this area here until Wednesday afternoon. and then it'll make a decision from there whether it wants to go higher or lower. On the weekly chart, we've got the, as I said, once this does turn over, it tends to go into a pretty nice correction. What percentage correction does it tend to go into? I mean, yeah, like this correction here, if we just highlight, the weekly swings are about, okay, that's a 3% daily swing. And then the selling really kicked off from there. And the next week, the daily swing was about 7%. And so if, in fact, the NASDAQ turns out to be the weakest of all of them, it may kick in. If we break down below this 44, 44.39, 44.30 level, then it may just zoom right down. Where might it stop? 43.03. Good resistance at 4,200. And let's just throw a fib on here up to that point there. And if we get a 38.2% retracement, it'd be down to about 43.10. And as you can see, that in the past had been a past resistance, support and resistance area. And let's see, Scott, what percentage of the does Apple represent the NASDAQ? We'll take a, I'm not sure on the NASDAQ. I think I have it on for the S&P, what percentage. It's a fairly high percentage. I'll see if I have that laid away in some of my charts. If not, I will take a snapshot of it. 11.25, thank you. I was going to say I'd take a snapshot of it and send that along when I send the update. But if you're ever wondering about what percentage a particular stock has of the index that it's on, you can go to the website for the S&P or the website for the NASDAQ and just ask for the specifics on the ask for the specifics for it to show exactly what the makeup is, and you'll get how much weight they have on that individual weighted index. Now the Russell. That's why I'm talking about the Russell. Okay, the Russell has broken this trend line. That's a positive thing. For the Russell, it did not show negative divergence here on a weekly chart, on the momentum or the true strength indicator, and it's not showing necessarily any, well, it is up against a resistance area here on the, it's up against a resistance because you can basically tie in these highs here on the momentum. So it has bounced up against this this previous highs as it's pushing on to make new highs. At this point, it's closing in on the plus 50 level, and the Russell doesn't get above the plus 50 very often without doing some kind of a pullback. And so, as I said, it has basically drawn and moved higher. This is a good positive move. If I were interested in potentially buying where might it run into trouble? Well, the next level of real strong resistance is up here at the 1160 level. It could turn there and do a pullback, but I would be looking for either bounces off the 8 or the 20, and so that's what I'd be holding on for at this particular point. And who knows, if we get positive information from the Fed that they're going to really hold off, because some people are betting that the Fed will not raise rates until next year. So the anyway, that's where we might go with the Russell. And Scott, you make a comment. Oh no, I said pullback. That has nothing to do with having a bearish outlook or not. It basically has what it has to do with is I want to be taking my trades here, close to pullbacks, and we'll see a chart on XRS, close to pullbacks and rebounding above it. That is the strongest place to take a bullish trade. Because if you take a bullish trade up here, what might happen? Or what happens often is you'll get a reversion to the mean, and it'll drop back down to the moving average anyway, and that's why I'm not a breakout trader. So let's see here. So that covers that. So here's the chart that we've been talking about a little bit. This is the quarterly chart. It's still in effect. In effect, Mike put this together or found this particular chart with his article that he did at the beginning of the month. We're still under the dome, if you will. Did you guys ever watch that TV show, Under the Dome? Price action on the S&P is still working within this dome of this rounded top that started back in actually 2014. So path of least resistance, at least right now. I find this a very interesting. Michael Bishop sent this cartoon to me where it shows this, artist painting a picture of a bear, but he's painting it as a bull. So anyway, I guess it's all a matter of perspective. Anyway, at this particular point, I think we're in for basically some sideways action. And then the Fed, I think their decision and earnings will identify which is the path of least resistance. From a purely technical standpoint, it would be a great time to get a pull back so that then we could look for some trades to the upside. And if I'm looking at stocks and I'm seeing them breaking out, I want to see how well they do. What's very interesting is one of the article in one of the newspapers that I do read is, of course, Investor Business Daily. And during this whole rally, it's been kind of a little bit weird. The number of stocks that have been on the stocks in the news section, which shows growth stocks that are either breaking out or moving on high volume. The volume on there we go. The volume on those particular stocks has still been, while above average, not as above average, above average on the as they tend to be when it's a real strong bullish market. However, the selling, when the companies give the the institutions an opportunity to sell off, if the institution is going for it, they basically just really go into the big sell-offs. And so I've been seeing a higher amount of higher above average amount of selling volume-wise than I have the buying side. So again, this week may be a wash. It may just wash right across the board. Earnings on all those big stocks that we talked about, they may be the catalyst to move either up or down. If they disappoint in any way on Tuesday, Wednesday, or Thursday, then I would be looking at the downside being the path of least resistance until we find support. Here we are on, we wrapped up some pretty good trades this week. We're starting to bring back our strategy 1. Strategy 2 is working well. Again, strategy 3 is working well. Those of you who do trade strategy 3 with us, one of the things that has been a little bit confusing in the past is, I'll pop this up. one of the things that's been a little bit confusing in the past is Thinkorswim, the nomenclature that they utilized for the weekly option was like this would be, in the past, it would be April 4th, 2016, and then designate the individual option. That became very confusing because people would think, okay, does that mean April 4th or another time? Now they've modified it. Now they're showing the date at the very beginning, 29 April, saying exactly which day that weekly option expires. And so when I put out the alerts on those, I'm going to be using Thinkorswim's nomenclature, but I also include in the email alert that goes out with Strategy 2 and Strategy 3 positions is the ticker for the individual option that we're selling in strategy number 3. Excuse me just a second. And speaking of strategy number 3, we have brought our cost basis, talked about this a little bit. Back in September 2015, I bought a LEAPS call and a LEAPS put that expires in January 2017 on Tesla, and we have been basically trying to sell premium against that on a weekly basis. I have a 0.75 win-loss ratio, or 75%, and the average income we've been bringing in is about $334 per week, which equates to $1,395 for the month. We our price basis, we had paid $9,010 for the 2 positions. We have now paid back over $9,166. Cost basis $156. And if we were to sell everything, just basically close out the long positions right now, we would have show a net gain of 48.26 on the so our 53.56%. I really like this strategy. And so if you want to find out more information about this strategy, you can go here. And so future presentation and events, monthly meeting for the Bay Area Moneymakers will be this coming Saturday, or Saturday of next week, if you will. And I'll be talking about using indicators correctly, training Wednesday nights. We're always doing those. And then also for the Bay Area Moneymakers, I'll be doing a webinar for the members of that next week also. And so if you have a group and you're looking for somebody who can present, I can present either in person and/or via webinar. Just let me know when would be a good time for you. So we developed the active trend trading system basically on the 5 pillars of trend trading. We identify what to trade, and we only trade top quality IBD stocks and our index ETFs. When to enter, entry action points, exit out action points is on when to exit. What strategy to use? Is it going to be basically buying the stock or doing an option trade, and what to expect? And I'm a firm believer that oftentimes traders get involved in trying to trade a strategy before they basically have a good, strong foundation on a system. And in that, I always build my individual trades off of how the system trades, which is important. This is one of the setups that we had here recently. XRS, I absolutely love these pre-earnings trades and runs because oftentimes what you can count on is about somewhere between 2 to 3 weeks prior to earnings. Oftentimes a stock will go on what's called a pre-earnings run. What can we expect in that pre-earnings run? Somewhere between a 5 to 15, occasionally a 20% increase in value after they've done a pullback. That's exactly what happened here with XRS. We entered this trade on 4/7 as it was pulling back and bouncing off the 50-day moving average. It broke above the 8-day. We entered there at $50.14. On the 4/13, I basically will use 5 to 7% as my T1. So we hit T1 on 4/13, and we sold half the position at 52.99. And then T2, with T2, we're utilizing the 161.8% extension from the move from here to here, and it hit that on this day here, which is 4/19, and actually pressed on above it, and that's fine. We went ahead and got out at our target. So on the total trade, we did about 9.98% or 10% on the total trade, and then we're done with it. And if I can get 3 or 4 or 5 of these kind of trades every earnings season, so that means we'll be able to hit that about 4 times a year. Like I said, I like this trade. So those of you who are listening are maybe not members of the Active Trend Traders, I offer a 40% discounted rate for people who watch the videos and or watch the or who are live. You can find out more about that at the website address here. I really had a couple of conversations this past week with members about certain particulars about strategy 3, strategy 2, and overall planning. An overall planning, and I enjoy the interaction. So that's it for this weekend's edition. Thanks for seeing. We'll be back on normal Friday starting next week. So we'll see you next week. Please keep growing the egg. Trade wisely, trade profitably. And now I'll answer a couple of questions that people would like to know about whatever's going on. Got a couple of questions. EWA strategy. Yeah, David, we're waiting for the new setups. We will provide courtesy. I'm going to be utilizing the inverse index ETFs if in fact we do get a pullback or if it gets more significant. Unfortunately, both Mike and I, we missed that trade from February 11th. We did get, we got some good triggers and all that kind of stuff. The first one we got into, we had a small loss. But the nice thing about the early warning alert system is in the back testing and what we've seen in the live trading is that typically it gives us about 3 to 6 or 7 triggers per year. And so, missing one trigger we know that we will make that up later in the year. So Lawrence says, on the XRS trade. I hope you got to participate in that XRS trade, Lawrence. It did turn out to be really good. And Kieran, at the end of the presentation, can you please share your thoughts about Tesla next week's possible entry short side strikes for calls and puts? Thanks for the advice. Got in late. Did you talk about Tesla or Facebook? No, we didn't. Not yet. But we can. So I had an earlier question, and I will get back to that. Gino, you still with us? Gino was asking about MHI. So let's go to the charts here. MHI. Okay, what is MHI? Okay, I'm not, familiar with MHI that much. Okay, what we've got going on, what do they do? Do you know? Thank you, Lawrence. If you could send me an email on that, I'd really appreciate it. Lawrence said that he has followed most of my trades since joining, and it's more than paid for his membership. So I like that. Let's see. What am I seeing here? Let's see, Gino, you said you got in where? Okay, 14.15. So I would think you got in on this side over here, where my cursor is. Yes. Okay. Yeah, Gino, I do not know what caused this, but it has been broken down to, now this is kind of a classic, and this is one of the things can also be very frustrating about technical analysis, is you've got a level of support across here. You got in here. It also had some support there. But those 2 days are very bearish type signals. Almost an exhaustion type move where it pushed itself above and then reversed and fell back down through. And if you were in at 14.15, which is about, like I said, about in this area here, you have already, blown, I don't know how much you've blown past your, hold on a second, let me find for it, there we go. I don't know what kind of stop you had on this, but you've already, well, it's dropped about 2.7% below that, but you've got strong, and so you're well within the 4% stop loss range. But it's got, this level here that could drop down. Right now, it's finding support at the 50. Hopefully, if that continues, then you're in good shape. A little bit of weakness, double top on the TSI on a weekly basis. You did make a new high. A hanging man last week, or week before last, on a weekly chart, and now a bearish engulfing pattern on a weekly chart. This uptrend here is still in effect, but it's going to have to drop down. Let me draw that with another. Let me draw that with this. And I'll get rid of that. No. This uptrend here is still very much in effect. And so I'll draw that. And so that's all the way down here. And it may do a pullback all the way back to that area. But you've got good support at the 20, at the 50, good support at the, this looks to be the 100. And so what do they do? Pioneer Muni, high income. So they're they do muni bonds. Okay. So right now, again, it's looking like this. I mean, this is a good place to initially get in as it was bouncing back off the 8, but now the 8's failed. Now what's going to happen from here? And it also failed on higher volume. So somebody was getting out of this. Now, will it continue in its uptrend? That's where you need to define your lines in the sand where you're not going to let it go any further below that, where it goes. And think about it. If it drops this level, let's say the 1375 level, then you could potentially be standing, but just wait and see what happens when it gets down to this line here. But you'll have to define your own level of risk on that. Let's see what we've got else. We've got going higher IBB. Oh, there was a question on Tesla. My thoughts on. Okay, great question, Karen. what I'll be looking on Tesla is at this point, well, I like it at 245 to sell puts. I like it at about 258 or somewhere in that range to sell calls. Let me go here to a daily, an intraday chart. Get rid of the noise here. What's it telling us on a daily chart, an intraday chart? And this is what I shared with you yesterday about how I'll utilize the intradays just to get a flavor of what's going on for those setups, both for the S&P, for the spiders and Tesla. Okay. At this point, you've got this rolling back up. It identifies, okay, here's where our strong support is, and here's, approximately where our resistance is. One of the things you got to take a look at with, so I would look towards, I'd be waiting for this, this is an hourly chart. I would be looking at when it got back down to approximately the 8 period or 20 period or even the 50 period. And to see if that would be a good place to potentially, do a short on a put. Or again, back here, I like the 245 level, 246 level. I would like to see it back up here, probably above, back up in the 257.72 level for a potential short call. If it breaks on above that and goes back into a strong uptrend, which it could do because it has earnings coming up on the 5th of May, I believe, 4th of May, after market hours, and started pushing up, and it went back into an uptrend, then I would look at the pullbacks to the 8-day or 8 period to 20 period for planning my short put positions. And I may just, if I go back into a strong uptrend, I'm not going to do the short calls because it's too hard to guess. Does that help? Okay, awesome. Let's see, next, Facebook. Facebook has been a challenge to trade. Let me go to the dailies on that. There we go. It's a daily chart. Okay, as you see, this level here, the 109.24 level, remember we have earnings coming up on the 27th after market hours. If I get back down here, Larry and Lawrence have been testing here about somewhere between 110 and 109.50-ish, I would look for a potential bounce. That would be, but I would only be holding through the 27th. And if it drops this level here, the 109, I'd give it like $1 or so below that would be my stop loss because I'm trading it with the intention of and I know that particular fall was due to to Google or Alphabet. And so I would be looking 109 level, 110 level, the 50-day moving average. You could lose that as your line of demarcation. You drop it, you bounce back above it, and take a trade. It's got a 274 range on Friday. It has been averaging about $1.50 to close to $2 for a range, and I would look at, in fact, if I picked it up here, I would be looking at closing it out as it approached this level back here, about the 114 level where there's resistance, and that's only about a 4% gain. The one thing, if you are an option trader, this particular Facebook is a great option strategy. If this holds, what's really cool is we'd have a higher low compared to this low here. And so with almost 3 days until earnings, we may get a break back up above the 14 level, retest the 15, and even potentially get up to the 1677 level. And depending on where you took, let's say off the 50, that would be about a, if it got back up to the 16 level, it'd be about a 6.27% gain in a few days. So I'll be taking a hard look at that on Monday morning. Let's see what else we got here. IBB, biotechs. Biotech, I really like biotech funds. I like the daily setup. We've come down. It has worked its way back up above the 50, which we see going on over here. The big question that we will have, of course, is, so let me activate that, is that downtrend line, it will potentially pose some resistance, but it looks like it has fairly clear sailing all the way up at least to, it's in a resistance zone, but it looks like it has some clear sailings from where it's at up to probably 297, so you got about another $10 in it. Before it starts approaching this downtrend line where you would expect it to have some resistance. What kind of a retracement have we done? It's on a weekly chart. What kind of retracement have we done so far? From here to here to here. Okay, it is just about pushed up to the 50. Looks to be running into some resistance level. But look, isn't this interesting that the 61.8% retracement would take it basically right to that line or just slightly above the 40-week moving average. So that's pretty. From what I hear is the biotechs may in fact be starting to try to make a turn, because these are very positive, some nice positive volume. Had some positive volume earlier in the year, kind of fell off and dropped. But again, I think it's still early enough in the game with this. Is if it continues to respect the 8 and the 20-day moving average, that planning trades around both of those areas would be a good thing. Does that work, Scott? Okay, what else we have here? Okay, yeah, you're welcome. PayPal. Make sure I'm not AOS, and then we'll get to PayPal. AOS. And let me come back. Has a long uptrend. Okay, has a long uptrend. Is there a setup that would make it a buy? Well, you got a couple of choices, Dorothy. You can wait for the breakout above 81.20 or 81.12, excuse me, because it's just about up to that level. What's our volume been doing on this big ups? Hasn't been. You always want to be concerned if you see this push up happening in below average volume, but it's at or slightly above average. It's kind of interesting, we're getting back in and the momentum is starting to roll over here. TSI on the weekly chart's still looking pretty good. And then TSI, when it goes into one of these kind of channels like this, prices can press higher. You've got earnings coming up on the 27th, and so yeah, I wouldn't necessarily be looking for a trade in it here, because look what's happened is you get this pullback to the 8, but it's been doing that a lot. If you get a pullback to the 8, that might be an opportunity to get in, but you're not going to want to ride this out much longer. But it is out much longer because earnings are coming up, and where's your potential from there? Well, you're looking at about a 2.5, 2.6% potential gain. And so that would be up to the hard resistance here, which would be a potential double top type of pattern. And so, because what's interesting is here we've got kind of a V-type pattern. V-type patterns tend to be weaker than the nice rounded type patterns, but we're right up into the level where you've got this high here, and so this is either a V pattern that's going to break out or go into a handle and then break out. But the thing about it is you never know if it's a double top or a V-type hammer or a cup-type pattern until you actually get your breakout. So I don't know if that helped or not. Dorothy, we're going to do a couple more here. I'm going to do PayPal Gold and PM Bible. I'm going to do PM, and then I'm going to call it a day, guys. I need to take my wife out to breakfast. PayPal, let's see, Judy is one of those that I got into. We got into PayPal down here at about 30, I want to say 38.08, 38.10 or something like that. And it has, and it finally got some traction. I think we actually bought it back over here, but it finally got some traction, didn't stop us out of the 4%, and has now come off of the 50 and is moving up. It has earnings on the 27th. It was initially shown as it was after hours. So if you are long this, I will, and since this now says unspecified time central, what I'll probably do is I'll probably close, not probably, I will close this position on the 26th. I would like to close it if I can get back up here to the $40 range, $41 range, or even up here to $41.68. We actually took some profits on this trade. We took 5% profit on it earlier this week when it bounced up here to the 40 level. And it's looking positive like it does when in fact bounce, move higher into earnings. But, just watch on that remaining portion. I'll be watching the 8-day moving average here. If I get a close below the 8, or even I will exit the position and have a stop loss that is equivalent to my entry price. So I'm break even on the second half of the trade that I have. And let's see, what else? GDX. And GDX, if I'm not mistaken, that's the miners. A lot of positive on the miners, but look what we've got going on our weekly chart. Looks like it's running out of gas. We've got a shooting star with a long wick on top, so we have gone up into this, look at this whole area here as a potential resistance zone. Here, let me get there we go. Look at, which starts about here and then goes to about where it's at as kind of a resistance zone that where you would anticipate it struggling, because everything where the people who are buying here, some of them have suffered through this. And so this is overhead resistance where, those guys who are going, dear Lord, just let me get back to break even or close. And they're going to be kicking out and selling. So that's where you would anticipate selling pressure coming out. I know none of us have ever had one of those kind of trades where we just said, dear Father, please let us get back up to break even, and I'll never trade that way again, right? And I'm ignoring your question, Dorothy. So let's do a real. This is a fun exercise to do. Is just to from here to here to here. And as you can see, this is what I like about these fib extensions. It hits its 100 mark, but look at the areas where it starts to slow down. It slowed down at the 161.8, and that's why these fib extensions can make really great potential turnaround areas. And as we can see, this has actually made its way up to, I don't know if I have, edit. No, I don't. I don't have the, and I won't put them in there, the other fib extensions. But it's very interesting, and these can highlight, look at this 200% move. It hit that and did a nice fallback on, on a weekly basis. Showed up a little bit more on the daily charts, where you can see it struggled with the 161.8% retracement, finally broke through it, retested it, broke back through it, and then once it broke through the 200-day moving average, or 200 extension, it was able to press even higher. So, but it has got back up here to this resistance, and is right now showing its weakness. And I think I had one more. Look at IP. Okay. Okay, there's a couple of ways we can do this. One is we can take, Scott, what Scott asked for is take a look at it using fib extensions. So we can actually draw from any swing high to swing low. I don't want that. I want this. There's a couple of ways you can do that. I'm going to draw from here to here. And if it breaks this 100%, these extensions above is where you expect things to go. And look what happens on IP. It gets almost up to the 61.8 and basically rolls over. Now, potentially, we're now starting to move back up. And so there's another level of extensions that we can do, and let's go from the intermediate swing lows and swing highs. We can go here, here, and here. And so it has already, gone past the 200 and has broken out past these other resistance. And so it's looking to potentially be targeting up here into these levels here. So it wouldn't surprise me to see it to go to 45.10. And that's one of the things I really like about the fibs. So, folks, that's going to do it for today. And Dorothy, yeah, my wife and I have put our house on the market here in California. We're not necessarily going to be bugging out and go anywhere. It's just it's time for us to start simplifying a little bit, but it's not going to have any impact on active trade or anything like that. It's just California is a very interesting place right now. No, I'm not looking at a retirement community. No, Scott, that's a great question, but no, we're not. We may, we have a place in Hawaii that we may go back to and bounce back and forth between there and the mainland. Okay, folks, have a great weekend. God bless everybody.